Hello friends, welcome to Nirmal Bang. I am Piyush Jain and today we are going to be talking about a result conversation. We'll do the conversation with Star Housing Finance Limited. We had talked with them during the last quarter. The numbers were quite strong last quarter and again they maintained the trend. And again, very strong growth in profits, strong growth basically in AUM. It's all again looking good. The non-performing assets, gross and net both, they basically have declined. So again, on the asset quality also, its numbers are looking good. So let's try and understand how the trend has been on the business. For that, let me now welcome the management, Mr. Kalpesh Dave, the CEO of the company. Kalpesh, welcome to the show.
Hey, hi Piyush. It's pleasure to be on the show as always, and happy to be interacting with you.
Sure. Let's start from the perspective of credit growth. Looks like the expansion is now actually getting cemented. There's a very strong growth from the perspective of AUM. What has been the driving factors for you in the last quarter?
So yeah, you are correct in the sense that the AUM has increased in terms of absolute numbers as well as in the percentage obviously because the base with which we started was really small, but happy to be having this growth. What is more important is the fact of the matter is that during this particular H1 period of 6 months ending September 30th, 2023, we have been able to provide housing finance assistance incrementally to 1000 plus economically weaker section low income group first time home buyers. So that is like kind of a first for us in the operating history of the company that for the 6 month period we have been able to provide this 1000 plus incremental disbursements in terms of numbers, and we are confident to carry this particular same momentum in H2. H2 traditionally is kind of higher for lending companies. So hopefully we should build on that, and on H1 versus H2 numbers also we should be able to see some traction.
Right, and I was looking at the trend of interest income numbers in particularly, and that actually was looking extremely strong. How has been the spread? Like, were you maintaining the same spread, or the spreads were higher?
So the spread remains the same, Piyush. Incremental disbursement, we have around 450 to 500 basis points of spread. That basically gets translated at the pre-tax level, given that the operating expenses get covered by the other income that we generate during the loan processing. So yeah, it has remained, relatively steady during this period as well. What is more important for the of I'm sorry, I just got cut in between. So what I was trying to say is that the book that we built of around 250 odd crores in the last financial year basically is now accruing the interest income for the 6 months period, and the same is going to happen for the next 6 months as well, and hence there is a bump up in the overall interest income that you can see. In fact, our interest income has increased by around 92-93 odd percent on a year-on-year basis. So the same thing will happen in the next financial year as well. These steady traction that we are observing, the disbursement, the book that we built up during the year will get translated for the entire year, for which the interest income will be accrued in the next financial year. Yeah, so that's how it goes. But on the spread part of it, it has remained relatively steady. And as the interest rates are kind of getting flattened, and the repo rate from here on basically will kind of remain steady or probably even see a decline, we are hopeful of getting some kind of traction on the spread part of it, as well as the borrowing cost gets rationalized as we scale up. The rating agencies also kind of look at us in a positive manner, so hopefully should be able to see some kind of traction. I wanted to tell you that in the last year we had to have a 17 or 18% increase in the overall finance cost because the repo rate were increasing. So in this year, maybe in the latter part of the financial year, that basically will kind of get compensated, Piyush.
Sure, and how has been the spread from the perspective of branches? Sorry, because I'm observing
Yeah.
that your employee benefit expenses have increased, but not a concern because you're also actually expanding geographically. So help us understand which geographies have contributed to the growth, and how the sort of plan of expansion manpower is growing.
True. So we have expanded. We will continue to expand in H2 also. We had ended up with around 14 odd locations, physical locations back then in the month of in Q4, and in the current year we have our basically branch network is comprising of 20 plus physical locations covering 30 odd locations, and similar kind of digital POPs are
That
also
is
there where
that is almost 50% increase.
that's right, where our staff is kind of stationed. So, I would not be surprised if this count also further increases in H2, and we cross around 25 to 27 odd physical branches as we close this financial year. So that is one thing. The reason for diversification is very clear, that we do not want concentration in one particular geography, be it existing geography or be it newer geographies as well. So within the geographies also we have kind of developed those clusters wherein, if you talk about Maharashtra, while Maharashtra will be forming my bulk of the disbursement, but if you slice it into three different pieces of Mumbai region, Pune region, and Vidarbha region, they are kind of equally kind of distributed, with Pune taking lead of around 3 to 4% over Vidarbha and Mumbai. So that's how we have been planning the disbursement. Happy to share that we have expanded our footprint to north. So there is one particular center which is coming up in NCR region in Ghaziabad, and that will kind of cater the growth around that region, and also provide a gateway to Uttar Pradesh as well. I had told you previously also that we want to see Uttar Pradesh as one of the regions where we want to expand to, and hopefully that should serve as a gateway for us, Piyush.
Well, both locations, NCR, where we have been hearing on the show that after a couple of years, NCR now actually has once again become a very buoyant sort of pocket of real estate growth. And secondly, yes, last time we were talking about how UP, the highest population density area, perhaps could be actually offering a large growth possibility. But having said that, help us also understand how's your digital platform progress happening, because I was looking at the write up, and it was looking like that perhaps you are trying to now implement start to end digital loan processing, and that should be something which should be very exciting for our investors, for the viewers also. So help us understand that.
So we are in the process of implementation. In fact, the lending suite that we are deploying is end-to-end lending suite. We are just building up on the current platform that we are having. Given the fact of the matter that it is convenient for the existing employees who are using the system, whereas the existing system was in the pockets of island, there was not end-to-end connectivity between the system. This suite that we are deploying is kind of a plus plus over the existing system, which will be taking care right from the onboarding to the appraisal process, be it of property, be it of the individual, going to the loan management system, and finally onto the receivable management. So it will be end-to-end lending suite, encompassing the overall loan life cycle, and even helping the customer to basically understand where his or her application is, how the by what time the loan is expected to be disbursed, and even after the loan life cycle, how the EMIs are scheduled, so on and so forth. So just to tell you, LOS has already been deployed. LMS is right now under the deployment mode, and post that there is this receivable management which needs to be put up. So that is where we are. Hopefully by December end or by January, starting, we should be able to have this end-to-end lending suite available for us. So that will, Piyush, if you talk about that, while I've always been vocal about the fact that rural is always phygital in nature, it's not entirely end-to-end digital. You need to have that physical interface with the customer, see the person, touch, feel the person in terms of how he is behaving, how his overall scheme of things are. Digital helps you to basically optimize the turnaround time, in terms of processing the loan application. So you are able to handle larger volumes from a particular center, or from a particular geography, without having to give up on the control part of it. So the quality remains intact when you are able to scale up. So post deployment of this suite, you should be able to see optimization of productivity levels, which should be again an addition to the overall balance sheet, and the cost to income ratio should kind of get rationalized as post
Agreed.
deployment. Yeah, that's what
I was just going to ask you that only, and you just almost answered my question. I was going to
Yeah.
ask you that efficiency gains perhaps could start to come by from fourth quarter and then start peaking up as we move towards the next year. But like hard, I understand it will be hard to say at this point of time. But like, how much basis point do you expect in sort of efficiency gains, or like how much decline in cost to income ratio?
So again, see, if I talk about what is my cost to income ratio right now, it is at around 60 odd percent. I was 65 odd percent back then. If I compare year on year basis, now considering the fact that we have expanded, we've still been able to bring it down courtesy the interest income that is getting generated out of it. So post deployment of this lending suite, I would not be surprised to have another 500 to 750 basis points of reduction in my cost to income ratio. But coupled with the book buildup that is there, next year if you're talking about, and I'm not giving any forward guidance, but we should be coming below the 50 odd range when we are talking same time next year. So that's how the accretion should be in terms of cost to income ratio. But you have to understand that we are building capacity, Piyush. We are onboarding manpower, so that entails cost, and the income that gets generated comes at a later stage. So that's how the things get built up on the balance sheet. But as I said, yeah, around 10% of reduction is on the cards for for this kind of expansion and the deployment. Yeah.
Well, that should be exciting. I think our viewers will keep tracking that. And as you just said, that perhaps the initial sort of visibility will start coming from the fourth quarter of this year when actually your system would be up and ready. But let's move to the sort of leverage part. We are now standing around 2 times versus 1 time last year, which implies that you have been able to actually use the funds for lending which you had raised earlier. I always ask you every time we interact is that how far we are now from another round of fundraise. Is this year already taken care of?
So, Piyush, that's the right question, and I get asked this question by all the stakeholders. Well, we have maintained that we are on the lookout for maintaining healthy capitalization levels, and time and again we have been raising equity to ensure that the strong platform and the leverage builds up, subject to all approvals in place. So yeah, just to answer to your questions, H2 we are working towards strengthening the capitalization level. At this point of time, it would not be right of me to say, because there is an entire process of capital raise that happens that entails certain approvals and regulatory clearances. So subject to all those clearances, obviously some capital infusion should see the light of the day. Again, not giving any forward looking statement, but the intent is to ensure that the leverage levels remain modest, and on that increased net worth, basically the leverage gets built up. So you see we cross 100 crores net worth, and for that particular aspect itself we had raised the capital, and once that 100 crores net worth was crossed, we build up leverage levels. So right now we are at 2.2 times debt to equity ratio. We should be crossing three and a half times, and at around that time you should see that kind of a corporate event, subject to all approvals in place for infusing equity. Just to answer to your question.
Yes, well, I would say that this is actually a welcome infusion, because we know that in the lending world also sometimes infusion happens because when the companies are in trouble. But a company which is registering strong growth, this is always a welcome news that you are growing faster and you need more money to actually grow faster. So perhaps I think our viewers will keep tracking it. One question I wanted to ask you, help us also understand your credit facilities are getting extended. You're getting more sanctions from State Bank of India, the top lenders, perhaps also good for your cost of funding. But it also is a vote where actually the banks are actually seeing more and more strength in the proposals. So help us also understand how the sort of um, uh, the banks and the sort of partnerships are growing.
So, Piyush, H1 has been a stellar, half year period for on the liability front, where we have been able to get the sanction lines of around 160 crores, which is 1600 million rupees during the period. from banks as well as financial institutions. There have been a lot of firsts during this in this period on the liability front. So we received single largest sanction of 50 crores term loan facility from one of our existing lenders. So that was a very first for us, SBI. That opens up a lot of doors, and we have been interacting, Piyush. You have seen how the company has been progressing from those incremental 5 crores 10 crores term loans to now going past 50 crores. So that kind of is a very first and a very significant milestone for us. That would entail a lot of 25 30 40 odd crores of term loans proposals being put up to banks and FIs, given that SBI has made the first move, and SBI normally makes the first move in such kind of things. So we are happy and grateful that we have been considered on merit and received that facility. I had also said that a diversification of the borrowing profile was also on the card. So happy to share that we have received. We have diversified our borrowing profile. So our first NCDs, has been subscribed by a financial institution. So that is also a very first on the borrowing side of it. So that couple of these these events makes us very well poised to further diversify our profile in terms not only borrowers but also in terms of the instruments. So there are a lot of other instruments which also you may come to know as we progress during the quarter, even in the next financial year. So that is something which is very heartening fact, and all credit goes to our CFO, Mr. Natesh Nananan, for leading this particular initiative. And at the same time, there was an event on the rating side of it. So our rating partner CARE has upgraded our bank loan facilities to BBB stable. So now we have India rating as well as CARE at BBB stable. And as we build book and as we maintain, build up on the capitalization levels, we should present ourselves to our rating partners and consider and urge them to consider us based on the merit that we deserve on the business performance.
Well, yes, that's why actually I brought this into conversation, because when the liability franchise starts becoming stronger, the depth actually becomes more, the cost of funding automatically goes down, and that is always good again, basically for your growth. So perhaps all of those actually we have been discussing, and those actually are taking shape. So perhaps that's good. Perhaps towards my last questions, how's the sort of a pipeline looking to you from the perspective of a lending pipeline? What do we expect so far from this exit quarter, the October month?
So, see, our run rate has been very steady at around 20 to 25 crores of disbursals every month. So, if I'm considering this and I'm multiplying it by 6 also, we should be, closing it in the range of around 425 to 450 crores of loan book. So as to say, we had said that we want to, cross 500 crores milestone, plus or minus a quarter or so. So I think we are on the right track on that side of it. Needless to say, we are very cognizant of the fact that this scale up should not be bereft of any quality. So, our collection efficiency is very important for us. Our PAR, which is 0 plus DPD, while GNPA is important from the reporting perspective, we plan in terms of what is our 0 plus day past due. Even 1 day default is a default for us. So that PAR has to basically be remaining stable, in fact decreasing as we build up our loan book. So that is something which is very important for us. If there is any movement, so the repair work basically takes precedence over the growth. So I would say that we would try to maintain the momentum on the lending side and cross that 500 crores milestone as a first step, and then look on from there. And what gives us confidence is the fact of the matter that our borrowing has really seen traction. And generally Q3 Q4 are good on the liability build up, as the banks and FIs also plan for their year-end numbers. So we are pretty much confident that we have the necessary firepower to scale up the overall balance sheet from here on.
Okay, and we definitely are looking forward towards interacting with you around the next quarter result time. But for now, all the best wishes for the digital platform. All the best wishes for the second half. And thanks a lot for coming on the show.
Thank you so much, Piyush. Always pleasure. Thank you.
And dear viewers, I hope you enjoyed this conversation. For now, it's a wrap.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.